Mic check. Hello, dear viewers. My name is Rakesh, and I'm your host with the webinar topic Euro US Dollar and GBP USD Technical Analysis today for 23rd of July 2021. If there's anybody, please let me know if the sound is through. I'm not checking the sound today. Video is through. I can check that. And in the previous videos, actually, I got a complaint regarding the music in the background. They say that they want to play their own music. So I'll just stop that music. So there will be less clutter in the video. And I also want to make sure that you know that I am a community member. I mean the Dukascopy community member. There is a website dedicated to the Dukascopy traders community, and I'm the member of that community and not an employee of the Dukascopy, but I still am doing the webinars for Dukascopy. Okay, and all the views or opinions or the trading ideas discussed in this webinar are of my own. And as the name suggests, we will be carrying out the technical analysis of the euro against the US dollar and the British pound against the US dollar. Of course, if the time permits, then we will also carry out the technical analysis of other major pairs or some yen pairs if you want me to. In this session, we will be strictly talking about the technical aspects of trading and ignore all the fundamentals. Because as a technical analyst, I know that every information, whether it is political or fundamental in nature, is already priced into the chart. So we will try to follow the charts only for analysis. In this program, we will only be using the candlesticks chart, no bar charts, no line charts. We will try to find out the key levels. The key levels are actually the places from where there is a possibility of the price reversal, okay, or there's a tendency of breakout. I mean key levels, of course you understand what are the key levels. Key levels are the important levels to keep an eye on, and we will see how we can trade from them. Now if you are new to technical analysis, I would request you to go to our channel page and then select the playlist and search for the profitable candlestick patterns or the profitable chart patterns playlist. It will help you in understanding what we are talking about in this program. And at the end of the session, I will be taking the questions from the viewers. So I request you to keep your questions to be asked till the end of the session. And last but not least, everything that I say in this webinar is for information or knowledge purpose. So you have to do your own research before you invest your hard-earned money in this. Okay, before we begin, I want to make sure that you go through this risk disclaimer, please. So enough for the risk disclaimer. This is just a formality. Let's go to the webinar directly. So on your screen right now is the daily chart. We have been discussing it from last 3 to 4 days. I must say that if you are aware already, now day before yesterday the price failed to close below this weekly line. Day before yesterday it closed higher than this, and yesterday it went higher and then again closed below it. This means that sellers are in full control of the market and they are going to push the euro down, and the US dollar is getting stronger here than the euro. So what I'm expecting here is that this weekly line which is rising may act as the new resistance for the price in the coming time, and this upswing pivot area around 1.1704 area may act as a good support for the price. Now I also have a feeling that because I am only discussing the 4 hourly and the daily charts, so you may get confused what is happening around here. So let us dig it deeper and maybe see what is happening on the 4-hour and 1-hour chart. Now see, the price is confined in this. Okay, I will just hide this one for some okay, no, then it will not show us, show it on all periods. I will change the color of this one. So because if it is yellow, you will know that this line here and this line here is making a cone. This is called a falling wedge, and the price is confined in this falling wedge still, and we are expecting the price to break out of this wedge to the upside, but that will happen only when the price is able to close above this falling line. Okay, this falling line, I will make it bigger so we know that this now is the thing that we are going to talk in the coming time, and this is important. Of course, this is an important thing, so we will mark it with a different color, maybe blue. All right, so all right, so that we know what we are talking about. So we are talking about this wedge, the price. See how the lower lows and lower highs are being formed in this one, but this is getting thinner and thinner, and eventually is going to end on 23rd of August. So on 23rd of August or before, the price has to break on one side, which is either on the downside or maybe to the upside. Now their downside chance is less, although it can also happen, but it is less. Why I'm saying that it is less? Because you see, on the downside there is upswing pivot, which is a weekly support here, which is a very good resistance in the past, which was a very good resistance in the past. Sorry, I just fucked up. Okay, which was okay, look here, which was a very good resistance in the past here. No, sorry, it was a good support in the past and may act as a good support again on this daily chart here. And if that is broken, then this chart will be a break of the double top here, and the price may eventually fall to 1.1075, which does seem less likely here. Okay, why it seems less likely? Because the price is trying to form here a falling wedge. A falling wedge is bullish in nature, my friends. The nature of this falling wedge is bullish, and the price may break out after taking support at this area to the upside. And if that happens, then the first target to the upside will be this rising weekly line, which may act as a new resistance. But if the price gets to pass through this, then 1.1975 will be the next target for the price. So now let us see what is happening on the hourly. On the hourly, the price is trying to take support on this broken channel resistance, and if it is able to manage take support here, then again in 1 hour or two it will test 1.1790 levels, and then eventually this falling wedge resistance line. So this is what is the possible scenario, but as of now there is no certainty where the price is going. So what my view is, my personal view, my opinion is that we should let the price get clear either from this falling wedge to the upside, or maybe if the price falls below 1.1704, then we can get a good trading opportunity in this. So till the time the price does not go above this or below this, we should stay away from euro US dollar. So don't put your hard earned money on a market which is going nowhere. Okay, talking about the Australian dollar, here a setup is forming. The price is moving as per our prediction, and there's a very high chance that the price will go to this 0.7464 levels before it starts its movement further down. But don't be surprised if the price starts moving down from 0.7402 levels only, because this was again a previous resistance in the past. So there is a possibility that after it is broken, the price will act as a new resistance, fresh resistance. So like today today the market is like kind of making a bearish pin bar at the resistance, but till the time we don't see this bearish pin bar broken to the downside, we cannot be sure that the price has resumed its uh, downtrend. And also if we just put stochastics here, I will put stochastic 10, stochastic 10. Okay, we will know that the price is still in oversold region, so there is a possibility that the price will go first to this 83 or 80 levels and then start its downtrend, and that will be, I think, a good option. Although I don't use these indicators, but sometimes you can see that if something is oversold, the price tends to go to that level again and then get sold. So I will say, just, I'm not saying that use this indicator, but sometimes you have to use them to gauge the direction where the market may go next. From here, if it starts falling, I'll not be so surprised. But if it goes to this area and then starts falling, then it will give you a better risk to reward ratio as compared to what it is going to give you now. Because if you sell here, then where will you keep your stop loss, and your target will be very close. So better if you let the price go here and then sell it if you see some bearish pin bar appearing here at 0.7463 reasons, and then sell it with a small stop loss higher than this candle here, and keep your target around 0.7223 levels. I think that will be a best idea. So what is happening on the 4-hour and 1-hour on the Australian dollar? Okay, here it seems like that the price wants to fall, but it is again and again getting support in this 0.7350 area, 55 area. Yes, so what I am saying is that expect the price to reach to this area when the sellers will be more aggressive as from right now. But on in the broad spectrum, if the euro dollar falls, if the pound falls, there is a possibility that it will take Australian dollar also along with it. But if you wait like a very good soldier who waits like a sniper to hit the bullet in the head when the enemy is not looking at it, or like a wolf hunter who is sitting in the snow for the right time when the deer is right in front of his eyes, so that right time may arrive on 2nd of August, I think, if the price goes here, and it will give you a very good risk to reward ratio. I hope you understand this. And the next thing coming about New Zealand dollar, see here also the same type of picture is forming. This is also forming a falling wedge type of structure here. If you join these lows here, it will form that structure. I'll just move it with the short line maybe. If you kind of do like this and this, so it is a falling wedge, but it is about to break. Either the price will now come down and may take support from this very good support here, the previously it was a resistance, or there is a chance that the price will start falling from here and then it will act as a good resistance. But as of now, there's nothing on the chart. There's very less movement, I must say, on this chart. On the hourly, I think that the price is trying to go to this line and then feel it as a fresh resistance. I will mark the channel that it is following, and maybe we will observe this market in the coming days, because New Zealand dollar, I think, is bullish. But the thinking of mine, that is Rakesh Kumar, does not matter in the market. It is the thinking of the broader large group of people, what they think the market will follow. So in case the market is able to go above this falling trend line, then the next target will be this channel's resistance line, which is of importance. So I think we should wait for that to happen, because right now if we try to open a buy, we are very close to the resistance, and if we try to sell, then we are very close to strong support. So let the price clear either from this resistance or to clear from this support, and then we will open a position in the New Zealand dollar. As of now, no position in US dollar, New Zealand dollar and US dollar. In USD JPY also, this is moving as per our prediction only. It has cleared this falling channel already and has started its up move, but we don't want to open any position in the buy direction because it is very close to this resistance zone, which is almost there already, 111.50 to 112.18. This is a strong resistance zone. Even if the price is able to go to this region, it may not be able to clear this area and may get rejected here and go back to 107.47. But if it does go high and is able to clear this 112.18 area, then we may take this opportunity or use it as an opportunity when it comes back to 112.818 area to test it as a next support. We can buy there with a small stop loss below the low and target upside which is open. I just not sorry, this is not an open target. Actually, we have the highs here. Yes, we have the highs at 114.54, and we also have the, yes, these highs. So these are the next levels of resistance, that is 114.54 and 118.60 regions may act as the resistance if the price is able to clear 112 comfortably. On the 4 hour, yes, it is very clear that the price is has started its uptrend, but it needs to clear this high of around 110.69 before it has to go further, and once this high is cleared, it has very less resistance to go back to 111.65 regions. But this rising line here, this rising channels resistance line may act as a good resistance. Also, this line here, this is also another channel's resistance line. So there is a confluence of resistance. So I will mark this as a red, red, because this is a crucial zone where you can expect the price to start declining if it reaches here in this region. So this is a region of resistance from where you can expect a downtrend from the USD JPY, but till then I think we should not open any position here. Yes, this is the area which I am expecting to act as a resistance. So this area, rather than marking it like this, I will mark it with a rectangle like this. So this area you should keep an eye on as a resistance, and I am choosing the color to be red because this is this from here I want to say that you have to stop here. This is the area of resistance for the USD JPY. So what is the idea here? Wait for the price to cross either above 112 or wait for this confluence to act as a resistance and push the price lower. On the US dollar against the Canadian dollar, yes, the price is holding today. We have already discussed it that it is just a pullback till the time this low at around 1.2301 is not broken. The downtrend is not say downtrend is not resumed. The pair is in actually a ranged market here. I have already discussed this range here, although it's a long term range. So the price has already tested the lower end of the range, that is 1.2061 area, and if it has tested the lower, so it will try to go and test the upper side, which is sitting at around 1.4689. but on the way we have a strong congestion at around 1.2914 to 1.3014 level. There is 100 points of congestion here. Before the price enters this congestion area from here around 1.2490 region, we have almost 500 pips of movement possible. So if you want to open a buy position in this one, I think this channel support line will be a good area to open a buy position, but to open it right now it is not recommended. Expect the price to go there till 29th. Maybe next week you will get an opportunity at this channel support from where you can open a buy position with a small stop loss below the low that the price makes that day, and you can target this region of 1.2914 in this market comfortably. I think so. See, on the 4 hour it is just consolidation, or you can say the churning of the price. The price is going nowhere from the last, I think, around 30 hours or so. Was okay, I will tell you exactly how many hours the price is churning. It's around 47 Really? No. Yes. 5, 10, 47 periods. From last 48 hours, the price is going nowhere. So it's better that you just leave this market and wait for the right time. And the right time in this case, it will be the support of this rising channel support line. So you better wait for that area to act as the next support and push the price back to 1.29 region. In that case, you will have a better risk to reward ratio. So what we are expecting here is that I will show you by example. We are expecting something of this sort to happen. Okay, and this will be our buy region in case the price comes here. If it does not, we will not open any position. That is all. Again, talking about the USD CHF, it is still in the within that USD CHF is within that symmetrical triangle. This is a range bound market. If you want to open a position, you can open in the sell if it strikes to this area around here, and if you want to open a buy position, you can still buy this area because it has a range of almost 300 pips here. Because it is daily chart, so it looks like a bit small, but on 4-hour and on 1-hour chart you can see that this range is almost 300 pips. I'll show you. Right now this range is almost 260 pips. So if you are going to sell here at this resistance and buy back again here, you will still get a range of almost 200 pips. But if you are a long-term trader, then I will say that wait for the price to clear from this symmetrical triangle and then eventually go for a sell at around this, which we have already marked on the daily chart, and stop loss. Now why I'm saying sell, because in the long term this market is in a downtrend, and if the market is in a downtrend in a long term, you don't buy that market if it is in a downtrend. So you go with the trend is your friend, remember always. So if you get an opportunity in this one, you will open a sell position at the test of this channel resistance. And when I say at the test of this channel resistance, that means after price touches this line, it should give you one of the two candles. One is bearish pin bar and second is a bearish engulfing. Now this is the example of bearish engulfing, where the candlestick engulfs the previous candle entirely and is red in color, and this is the example of bearish pin bar, where the candlestick is having a long bar on the upside, is closing red and has a very small body. Another example of bearish pin bar is this one, and this is also a bearish pin bar. This is also a bearish pin bar. All right, this is a bearish pin bar at resistance, and if you keep the stop loss at the high of this candle, you will get a very nice down move. So this is all about today's key levels. I want to actually finish this webinar here, but as I said that I will be asking questions. If you have any questions, you can write them in the chat box. I will be very happy to answer those. And if there is any specific pair that you want me to discuss, or the technical perspective of that pair, that I will be very happy to discuss that. And I'll be waiting for your questions for like 1 minute, and after that I will just wrap up this webinar if there is no question. And even if you're watching this webinar after I go live, or a repeat telecast of this webinar on the channel page, I request you to write your questions in the comment section. Every day I come for the live webinar, I check what are the questions or any comments in the previous webinar, so I will try to answer them in the next webinar. We are doing this every day. You can tune in every day at this time. We are doing this for half an hour, and if it becomes interactive in nature and you start asking questions, or you have any further pair to be discussed, maybe we can extend it to 1 hour or more. All I want is your participation in the talk, in the chat, so that we can do it in a better way. So to end this webinar, I just hope that you got some idea about the levels of support and resistance that you have to keep in mind. My humble suggestion or request is that you should not be, you never have to risk more than 1% of your capital on any single trade. This is a key idea. See, if you risk more than 1%, you have a very fair chance that you will blow up your account. So take it as a warning. I'll say, don't try to gain more and more on a single trade. For that you will have to risk more and more. So my suggestion is that you risk less than 1% on any single trade, and you should enter a trade only if it has a potential to give you back 3 times minimum whatever you have risked on that trade. So in other words, in the trader's word, you should have a minimum 1:3 risk to reward ratio. Otherwise you should not enter a trade if it does not have it. Now with this note, I shall end this webinar. Please press the like button if you find this video useful for you. Leave your suggestions in the comment section and consider subscribing to the channel for more such video. Also, you can also join the Dukascopy Forex community like me, where there are so many things for the Forex traders. The link is there in the description. I wish you a very profitable day. Thanks for watching. Happy weekend. See you on Monday. Bye guys.
Keep you.